happy Tuesday, everyone. Thank you for joining us again for another incredible episode of Blockchain Simplified. And I am Trevor from the Crypto Recruiters, and this is.
Jessica from C4.
And let's get into it, Jess. We have a lot to talk about today. We're fresh
We
off
do.
of conference in New York, DAS, incredible time. A lot of awesome things that were talked about, and I think it's really relevant to the subject matter that we're talking about today. So, what we're
Yep.
really going to be questioning is, how could stable coins impact the U.S. dollar's role as a global reserve currency, and what we want to really kind of get about out of this conversation is more so, what that could potentially mean for the future of money as well.
Yeah. So, is the future of finance tied to stable coins? Let's start by, I think, just making sure we're all on the same page with the current events. So, one of the things we're doing with Blockchain Simplified is making sure that we are bringing in what's going on in the world right now, and that is stable coins. There's a lot of talk about stable coins, and it's hard to keep up. And as Trevor knows, an hour before this, I found out that there's something new in the stable coin land, but I think that's just par for the course and how it goes. So, why don't we talk about why we're here? And I think a good place to start is in the words of John Collison, who's the co founder and president of Stripe. He said, stablecoins are finally happening and they're really useful. So he called it and we're here. So in other words, stablecoins are at the center of debates on payments, regulation, and the future of the US dollar's global influence. So Trevor, do you want to get us started with some facts about the US dollar?
Yeah, and kind of going back in time, and we'll give you a bit of a history lesson, but essentially, right now, today, the US dollar plays a dominant role in global finance. I don't think that's a mystery to many, but the US dollar does make up about 58% of global foreign exchange reserves. And that essentially means that 58% of the money being held in central banks around the world is in US dollars. And I honestly thought it was a little bit more, but it's interesting to kind of have that fact. And the USD is central to trade, international debt, global markets. And as of January 2025, the US M2 money supply, which is how much the US economy has available, stands around $21.56 trillion, which is incredible.
Yeah, that's wild. And I think the takeaway from that is just that we're having this discussion because stablecoins are central in debates around payments, regulation, US monetary power, and it really could play or is playing a role in reinforcing or reshaping how the dollar impacts global funds, global money. So, I guess before we dig further into what stable coins are, how they work, and how they're pegged frequently to the US dollar, let's do another quick history lesson, which is, as you said, Trevor, most people probably know that the US dollar does dominate global finance, but do you want to walk us through why? Like, how did we get here? It didn't just magically appear. What are some of the steps that got us to this point? Oh, your mic just went out, Trevor. Well,
It
you're
wasn't
figuring.
actually,
Oh, there we
yeah,
go.
it actually wasn't always that way in terms of the US dollar being I would say, dominant global reserve. And the US dollar became the world's kind of go to currency back in 1944 with the Bretton Woods Agreement. And this was essentially what made it tied to gold and made it kind of the backbone of global trade. And then fast forward a few decades to 1971, and that's when President Richard Nixon in the US dropped the gold standard, and the dollar became truly a fiat backed currency. And even without gold, the US dollar is still really at the top today because it is something that's trusted. It has a long history of being that main kind of go to reserve, and it's widely used in global trade, and it's still backed by a very strong economy.
Yeah, and that's why so many stablecoins are choosing to peg themselves to the US dollar. And so I want us to get into like what does that actually mean to be pegged to another asset and how do they work? And I think to get there, we should just talk a little bit about the timeline of crypto. Stablecoins didn't just, begin out of nowhere. When we talk about cryptocurrency, we generally start at the beginning, which is 2008 when the Bitcoin white paper was published, 2009 the first Genesis block, or not the first, the Genesis block, which was the first block, was mined. And From there, things move forward. In 2014, BitUSD was the first stablecoin that came out. Then in 2014, Tether, which you've probably heard of as USDT, and then 2018, USDC was launched by Circle and Coinbase, and it is still a stablecoin that is run by the company Circle. And in 2025, we really see both USDT and USDC dominating the market of stablecoins. And as of 2025, approximately 99% of stablecoins are tied to the US dollar. So it's big. This is a big thing. And let's talk about what stablecoins are and how they work a little bit. Trevor, do you want to start by just
Yeah.
explaining it to us?
Absolutely. So, essentially defining stable coins, it is something that is growing fast, as you all know. I'm sure that anyone that's kind of been tied to the space is hearing a lot of the buzz in this, but we'll explain a little bit further. And stable coins essentially are pegged to a reserve asset like the US dollar or gold. And a quick analogy that we kind of thought about was that stable coins are like a digital gift cards backed by real cash. And if you are going to go into a store and purchase $50 store gift card, that represents a promise that that store will honor that $50 worth of product. And a USD backed stablecoin represents kind of a one-to-one digital token backed by $1 in reserve. So if there are too many that are obviously printed without enough money to back them, then that system is at the risk of collapsing. And like a store selling, more gift cards than it can actually honor, that would be a problem if the stable coins were not actually pegged to an asset back one to one. And that's a little bit about what that's about, and why it's really so important to understand that.
Yeah, I like that as an analogy,
Yeah.
Trevor. I think it's something most of us can understand. And the thing about stable coins is that they can be great until you go to the store that sells a million of them and realize that they only actually have $42 in the register. So that brings in this question about trust. So we know that we talked about Bitcoin a little bit. Bitcoin is based on a trust in the network, trust in the protocol. But when we're talking about stable coins, when there's a central issuer,
Yeah.
trust really is essential. And you're expecting that the register matches the amount in the digital card or the gift card. They need to match up. And so we're going to keep talking about this, but you can't issue more tokens than you can cover, or you can, but it doesn't end well.
Yeah, for sure. And this does require a level of trust in being able to hold enough assets. And if the issuer doesn't do that, then obviously that would be problematic for the whole reasons why these stable coins are really created in the first place, and as
Hmm.
stable as most things that can essentially be, right? So the total market cap today, right now, to the best numbers that we were able to find, is that the market cap is over 230 billion, yes, with a B, dollars, for stable coins. And that's, at the long run, it's still a small fraction of what the actual US money supply is, but it's really gaining influence.
Yeah. So one of the things that I hear people often say is they're confused about how stable coins are stable. And as you said, Trevor, they're only as stable as the asset that they're pegged to. So if they're
Yeah.
pegged to something that's going like this, the stable coin's going like this. It mimics that. But there are a number of different types of stable coins. And I think it'd be interesting to talk a little bit about what these types are because they're not all the same. They do differ. And that's one of the great things about this technology is we're constantly innovating, changing, finding new things. But what we've been talking about a little bit has been more related to fiat backed stable coins.
Yes.
So for every fiat backed stable coin, there's one to one with that currency. So, like US dollar or euro or whatever it is. So, like USDC and USDT have been the examples we've given. Trevor, do you want to go through the other types of stable coins as we
Yeah.
discuss fiat backed?
Absolutely. And this is actually, we got some of this information from a great article that MoonPay put out. So props to them for breaking this down and really putting it in a really easy to understand fashion. But, crypto backed stable coins, instead of fiat, in the name, as the name implies, these are currencies that are backed by our cryptocurrency backed stablecoins that are backed by cryptocurrencies such as Ethereum or Bitcoin, and they are often collateralized to over collateralized rather to account for the cryptocurrency price volatility, which we just kind of mentioned before. And
Yep.
then we
And
also
then, oh,
then
go
we
ahead.
also have an example of that as well too. Another one that's pretty popular is algorithmic stablecoins. And algorithmic stablecoins, they use an algorithm and smart contracts to control, supply and demand, attempting to kind of maintain this stable value at all times without necessarily relying on that underlying collateral as well too. And one of the examples of that was like Terra Luna. And then lastly, we have commodity-backed stablecoins, and these commodity-backed stablecoins are pegged to tangible commodities like gold, silver, or oil, and are offering a more kind of classic hedge against inflation and market uncertainty.
Yeah, so I guess like most things in the cryptocurrency space, we say one thing, stable coin, and then there's four different types of stable coins. It's never anything simple, but I think the takeaway is that whatever the stable coin is pegged to, it's a one-to-one peg. And the volatility and kind of the trust in that is based on how based on that other asset basically and how it's being issued. And I think that brings us to some of the pros and cons of stable coins in terms of issuance and volatility and whatnot. So, in Bitcoin and in some other cryptocurrencies, we know that there are algorithms used in order to create the issuance of these. And that adds in some stability. There's also some other things that we can see as a positive, which is faster, cheaper transactions. A lot of micropayments are used. We
Yep.
also have this original idea of Bitcoin of financial inclusion. So, Trevor, you and I have talked a lot about this idea of banking the unbanked, of why we kind of fell in love with this technology is that it
Yeah.
can really help people. It brings financial services to people that may not otherwise have access to them. And this financial inclusion is really part of stable coins, and it allows people to access USD or other types of currency through this other format, so you don't really need a US bank account.
Yeah, and some of the other things too about that, Jess, which was great, and we talked about that with cross-border payments and it really being useful for remittances and merchant payments alike. And it really does give that sense of financial inclusion that we were just talking about. And some of the other things that are unique to stable coins, because stable coins, even though they are similar, some of them are not necessarily all created equal. And one of the things that you have to think about, depending on the network, is that these stable coins will have gas fees as well too. And essentially, how gas fees work, for those that aren't familiar, it's a small payment that you make to essentially process a transaction on a blockchain network. It's like a delivery fee for sending that digital money. So these fees pay for the computers, we call them nodes, to kind of verify and secure these transactions. And one, I would say, the blockchain that would probably have the highest volume of stablecoin volume would most likely probably be Ethereum. And this is something that's widely used because of the network effect and the overall size and all the other kind of things that are built up on it. But with that does come high gas fees, especially during times of high volatility in the market, especially when there's a lot of increase in price valuation of certain cryptocurrencies, or decreases in them as well too. And we kind of going back to that original example, stable coins are like digital gift cards, but gas fees are the cost to kind of essentially, if you were going to not physically hand over that gift card to your friend or your family member, if you were going to send it digitally, that would be the cost to actually for to deliver it for them so that they can redeem that.
Yeah, and imagine you're going to get a gift card for somebody, and I'm sure we've all done this before actually, where you go to pick it up and then there's a price. That's kind of
Yeah.
like the transaction fee. I know for Christmas I got some gift cards and they're not, stable coin one to one, but it's like, "Oh yeah, sure, it's 350." I'm like, "I'm already paying $50. Now I have to include that in the price. Can I give them 46.50 instead?" But so, yeah, there's always a transaction fee. It's in, different ways that that happens, but it's definitely something to be aware of. There's also the challenge of what network you're using. So, Trevor, you and I have talked about how there's this advantage now to being able to have wallets and software that give us more notice about what's happening, to say something like, are you sure you want to send this on this blockchain? But if you're sending USDC, like you talked about with gas fees, if you're sending it on the Ethereum blockchain, you have to have Ether in order to pay for this. But in addition to that, you have to make sure you're sending it on the right chain. So
Yeah.
you need to make sure that the address actually aligns with whatever chain that you're using, and that the gas fees, that you have the amount in the correct denomination for those gas fees. So I think it sounds more complicated than it is. Once you get into it, I think it's easy to figure out, but you do need to make sure that you're aware of these elements to it, or it's easy to make a mistake. But like I said, wallets now give us a warning oftentimes.
And there are also a lot of projects that are, I would say, maybe even working on bridging and making sure that essentially one day we won't have to deal with a particular stable coin being on different networks, or that they can at least, you can send one to the other without having to worry about that problem.
Hmm.
Some of the different blockchains that you can think of, for example, a USDT, right? It can be issued on Ethereum. You can have a USDT version on Binance Smart Chain. You can have a USDT version on several others that are out there. And when you're trying to transfer one to the other, you need to make sure that it's going from one to the actual same blockchain. And this is something that I'll be brave enough to say, and I think a lot of people have made this mistake. Is I've sent a USDT in Ethereum. I've sent it to a Binance Smart Chain by accident, and I was wondering why I never received those funds. So that is something that I think in time, with the UI UX, these kind of problems and issues will definitely be reduced in the future, but it is still something that I think that newer users to the space have to be aware of, and just something that we collectively as people in the industry are working on to make sure that this isn't going to be an issue, because it's not instinctive at first.
No, and I think I'm glad that you brought that up, Trevor, because even people that have a lot of experience make mistakes like that, which is why we always say send a test transaction, which those of us who've made mistakes have also made the mistakes of not doing that. So, we learn and grow. But if you're trying to send, $100, maybe send a dollar first. You have to weigh that with what the gas fee is going to be, and if it's worth sending twice, or if you're willing to potentially risk losing that amount. But there are some things in place that we can do. Although most of the time we think, I got this. And later we're like, okay, now I need to back up and really learn how to do it. But it does happen to all of us. It is a steep learning curve, I think. Um, but one of the things that we know about Bitcoin and decentralized currencies is that there is no central party that can say, okay, we're going to freeze that asset, or that transaction didn't go through, which differs in some ways from some of these currencies that have centralized control of things. And something that's pretty interesting is that stable coins like USDC, they can freeze the assets.
Yeah.
So it's different than Bitcoin, where you can't do that. We're using a company that is then issuing these currencies. And in 2022, Circle froze over 75,000 USDC linked to something with Tornado Cash. We're not going to get into Tornado Cash on this, especially with recent updates. There's a lot in it, but basically, they do have the ability to freeze this, which is why there are a lot of naysayers out there that say that one of the cons to stablecoins is that it is not decentralized in the same way, even though it uses a decentralized platform like Ethereum or Polygon. It still has that central issuer. And that, kind of circling back to what we said about that gift card at the
Yeah.
store, we're trusting that that central issuer has that amount in their reserves to back it. So you're not going to go in and be like, I'd like to redeem this gift card. And they're like, we've only got 40 bucks on the register.
And back to like the whole point of centralization and control, a lot of proponents of this are mentioning and bringing up that this is an added layer of, I would say, ability for the central issuers, the companies that are issuing these stable coins, to have a lot more, I would say, insight about the transactions, and an ability to kind of really track where things are going. And for the people that were essentially brought into or attracted to crypto for the the beauty of it being decentralized and having a bit of privacy over the transactions, even though it's on chain and it can be tracked, there was still a bit of anonymity to it. But with centralized stable coins, it's quite a bit different. And these stable coins really kind of rely on these issuing companies to back these tokens with real assets. And this is something that is obviously quite different from the decentralized nature and assets like Bitcoin. And these issuers, they can be, as we mentioned before, pressured by governments or some other kind of entities to freeze or block the funds. And that really gives less control to the end user in terms of what they're able to do with that, because it's all digital, it's all transparent, it can all be traced back to the original source, which is really interesting. And I think that that's something that people should understand is a stark difference from the traditional quote unquote type of cryptocurrencies that we probably know about.
Hmm. Yeah, well, so those are, I think, some of the kind of pros and cons of stable coins when we step back and look at this. But there's another, I think, very large challenge
Yeah.
within stablecoins, which is regulation and policy and how it's being perceived by governments. And
Mhm.
why don't we talk a little bit about that? Because this impacts all of those things, and all of those things impact the regulation and policy landscape. So, why don't we do a little timeline where we go through the current events, which of course, it's like constantly changing. And just so you guys know, as Trevor and I were going through this, like, I was like, here are all the things that happened. He's like, why don't we do chronological? I'm like, I thought this was chronological. Like, it was not, but there's so many things constantly happening, bills being pushed or comments people are making, that it
uh,
is really hard to keep track. So we're going to do a rundown to try to keep, get you to see what's happening currently in the US. We won't cover everything, but thanks to Trevor, it will be at least somewhat more
yes.
organized. So,
So
you want to
we're
get
gonna,
us started?
yeah, absolutely. So let's first start with the Genius Act. And for those that do not understand that acronym, it's Guiding and Establishing National Innovation for U.S. Stablecoins. So that is the genius behind the Genius Act. And this was introduced by Senator Bill Hagerty of Tennessee in February. And the purpose of this was to really kind of establish a regulatory standard for stablecoin issuers, and really kind of making sure that it included some type of consumer protection, obviously be AML, KYC compliant. And, the goal of this is really to kind of make sure that we're going to focus on crime prevention and really kind of eliminate some of the bad actors out there. And in a press conference, actually a little bit later on in February 5th of this year, Senator Tim Scott of South Carolina and a chairman of the Senate Banking Committee said, stablecoins enable faster, cheaper, and competitive transactions in our digital world and facilitate seamless cross border payments. This legislation will expand financial inclusion and provide much needed clarity to ensure the industry can innovate and grow here in the United States while protecting consumers and promoting the US global dollar's position.
Yeah. So, he also called the Genius Act common sense rules for
Yeah.
stablecoin issuers. But it's not all positive. Haggerty has had to kind of defend this bill quite a bit and say that, point out kind of the positives because there have been some naysayers. Senator Chris Van Hollen, I'm not sure if I'm pronouncing that name right. Just so you guys know, Trevor and I both mostly read rather than listen to things. So I hope that I'm saying that right, but can't promise. I should have looked it up. Apologies. But he articulated his concerns regarding the Genius Act and said, I remain concerned, however, with several issues surrounding this bill, including the need for additional measures to ensure that stablecoins don't become a currency of choice for illicit actors. And you mentioned something about that too, but I feel like we should just point out, obviously, we're sharing unbiased content, but we're both in the crypto industry, so we obviously both think that it is something that is useful and important. But bad actors and crimes exist in every financial system. This is not
Absolutely.
unique to crypto. It's not
Yeah.
unique to stable coins, whether it's dollars, euros, Bitcoin. Criminals will always look for opportunities. So, like, here's the thing, no one blames iTunes or Spotify if a scammer tricks someone into buying gift cards for them. So, like, if someone tricks you into buying gift cards at whatever this store is, it's the scammer that's the problem. It's not the gift card that's the problem. So,
Yeah.
yes, there needs to be regulation and rules around this, and but I do think it's just important to back up and say criminals will use all different types of currency. This isn't like a specific stable coin
Yeah.
piece of information.
For sure, and one of the other quotes as well too, and we'll bring this because we do want to keep this well rounded and bring as many different viewpoints in as well
Thank you,
too. And this
Trevor.
in this particular topic is interesting because with legislation, especially here in the state side, it's very, very difficult to get all parties involved to be on board with one subject matter. And this is something that, actually has a lot of bipartisan support, which is really interesting. So, that's why we wanted to kind of bring both sides of it, not only the Democratic view, but the Republican side as well, too. And one of the other quotes from Senator Van Hollen as well, too, is that I'm shocked that Republicans on the committee voted against my amendment that requires that members of Congress disclose their holdings and financial interests in digital assets under the Stock Act. And this is a simple measure to ensure transparency and accountability and protect against conflicts of interest. So, it's just something that's really fluid and moving fast. And, I would love to kind of even bring it more recent to what was mentioned at the Digital Asset Summit. And this was March 7th. It seems like it was so long ago, Jess, but it was honestly like a few weeks ago, which is crazy.
It was last
And
week.
yeah,
It was like
it's like,
we just saw each other like 5 days ago.
yeah, and it was fresh off that summit, which was great. But on March 7th, Treasury Secretary Scott Bessent said that as President Trump has directed, we are going to keep the US the dominant reserve currency in the world, and we will use stablecoins to do that. So maybe you can talk a little bit more about some of the other people that had chimed in on their thoughts about this subject as well, too.
Yeah, also, I just realized I thought you were talking about DAS, the Digital Asset Summit that we were at last week, but you were talking about the White House Summit, which is funny because those are obviously 2 different things, and I was not at the White House. They didn't invite me.
Maybe you
So,
were.
okay. All right. So let's talk about Senator Elizabeth Warren from Massachusetts and some thoughts that she has had on this. So she has said if these firms want to engage in payments, they must partner with or facilitate transactions among regulated financial institutions. But this the stablecoin bill that Trevor just was talking about, breaks that status quo by greenlighting big tech companies and other commercial conglomerates to issue their own stablecoins. So she also said under this bill, Elon Musk could roll out X money tomorrow, turning social media into a payments empire with little oversight. So there's obviously concerns on both side of things. And in addition to kind of these regulators, these senators, whatnot, there are also people that are outside the this kind of legislative branch, but they also have opinions. So, like American Bankers Association has raised concerns about the Genius Act. So there's positives and minuses, pros and cons. There's people that are for it, people that are against it, and there's also been some bipartisan support saying that we don't maybe agree with all this, but we do agree with where this is going. And I do think that this is moving along. Trevor, you saw Kristen Smith from the Blockchain Association speak in real time at
Yeah.
the actual Digital Asset Summit we were at. Do you want to say what she talked about
Yeah.
related to this?
Yeah.
I wish I'd seen it.
Yeah, absolutely. Yeah, absolutely. And I mean, ultimately, I think that we kind of got to the point about why stablecoins could benefit the US dollar as a global reserve. And it's going to ultimately kind of really expand global access to the dollar. It's going to increase the US dollar's liquidity worldwide, giving people access to that digital dollar, even without, access to a US bank account, which kind of circumvents that. And probably why some banks are not necessarily the biggest fan, but the positive stance of this and mentioning what Christine said as well too. And a great quote was that I think we're closer to being able to get those bills done for August. They're doing a lot of work on that behind the scenes right now. And that was literally at the Digital Asset Summit that we were just at in New York. And also, too, Bo Hines, who is the President Council of Digital Assets, said that we saw that vote come out of the Senate Banking Committee in extremely bipartisan fashion, which was fantastic to see. I think our colleagues on the other side of the aisle also recognize the importance for US dominance in this space, and they're willing to work with us here. And that's what's really exciting about this. And I think it is absolutely exciting to see this moving along and at the pace that it's moving along because typically anything from the government level it takes a long time for people to even get on the same page, let alone actually start to move things forward. So it's really interesting.
Right. I agree with you. It is interesting and it's hard to keep up because there's constantly these new things back and forth with the bills. But I think that was a pretty good kind of explanation of where we're at right now in the US. And so within this, there are a lot of conversations about how stablecoins could benefit the US dollar as a global reserve, how it could undermine the US dollar as a global reserve. We really have a lot of different opinions back and forth on that. But I think now that we have an idea of how stablecoins are functioning in the US, maybe we can talk about other countries a little bit and what other countries are doing as well. So why don't we
Yeah.
get into a little bit about like the BRICS nation? So
Ye-
Russia, Brazil, Russia, India, South Africa. Do you want to give us kind of an overview of
Yeah,
these
yeah.
members?
So, yeah, for the folks that aren't familiar with what's going on, the BRICS nations, as Justice mentioned, Brazil, Russia, India, China, South Africa. There are other nations that are also showing interest in being a part of them. So they can only use so many letters to for that acronym. But essentially, these governments in these countries, they're looking for a way to reduce their resilience on the US dollar. And despite this, some of the citizens in some of these BRICS nations are actually using stable coins to access the US dollar from the bottom up. And one of the examples was that in China, people were actually arrested for purchasing Tether, which was USDT, which is banned for the use in crypto trading yet still actively used. And these Chinese authorities actually busted an underground banking ring using USDT for illegal transactions. So just fan- amazing there that that's actually being done. And then we also have to think about other nation states as well too, Russia, North Korea of the world, etc. And those that the US may want to impose sanctions on. And by being able to use stable coins like a USDT, they've actually been able to kind of really bypass these traditional financial restrictions. One example is that a Chinese import export firm publicly claimed it used Tether to settle trades with Russian partners, which was essentially just skirting these sanctions. So it's really, really fascinating to see how these stable coins, the pros and cons of that. And maybe you can talk a little bit more about kind of what happened in July of last year, too, Jess.
Yeah, absolutely. I was just looking, there's a couple things from the chat that I found really interesting that I want to come back to, like in the on the
Yeah.
LinkedIn chat. But yeah, let's talk about what happened in July. So you're talking about Russia and sanctions and kind of the workaround
Yep.
of that. Is that what you're talking about? Okay, so a Chinese export firm publicly claimed that it was using Tether to settle trades with Russian partners, basically to skirt sanctions. And this happened in 2024 in July. And basically, they're just trying to bypass traditional banking systems and to avoid sanctions by doing this. And they publicly admitted this. Somebody put something in the chat that kind of connects to this, which is that blockchain transactions are more traceable than US dollar transactions. Stablecoin transactions are documented on blockchain in an immutable record. You need to go through KYC to obtain stablecoins, kind of. So using it for illicit transactions would leave evidence that could tie someone to this activity. I just want to point out, like, that is correct. If you're using a regulated exchange and you want to get a stable coin, you absolutely do need to go through KYC. You can't like go onto Coinbase and just buy as Joe Schmo. You have to actually put it on. But there are ways that, like we said before, if a criminal wants to be a criminal, they're going to find ways to do
Yeah.
that.
Unfortunately.
So we may not know who's doing it, but to this person's point, we can absolutely trace where the funds are going and how. We just might not know who is at the other end of those. But I think that that's a really good point. But so basically, there are, regulatory concerns around this, and this information about how Tether was being used has made people, jumpy and nervous about it as well. And
Mhm.
somebody else who I think is kind of nervous about the use of stable coins is Christine Lagarde. From She's
Yes.
the president of the European Central Bank, but she has some thoughts on it, and she has said, "We have a duty to play an active role in balancing the risks and benefits of innovation in payments so that money continues to serve Europeans well." So I mean, across the world, across the globe, we have people that are really involved in trying to make this safer, and we have people that are trying to use things nefariously. And it kind of goes back and forth. It's like one step forward, and then, the criminals are jumping forward. And how do we use this technology, these financial payments, in order to keep things safe and to trace where it makes sense to trace, but also giving people financial freedom and some privacy?
Yeah, and I think that, to kind of wrap this up, we can understand just by all the things that we brought up today that stable coins are here. They are making their mark, and I don't think that they're going away anytime soon. If anything, they're just going to become more commonplace and known for a lot of people that are crypto savvy and those that aren't. Ultimately, I feel like stable coins are going to be something that's just kind of running in the background and being used and part of our new digital global financial system, which is really interesting. It's great to see ultimately kind of really how far we've come along. And yes, there are proponents for both sides and reasons as to why people, would really enjoy what the benefits of stable coins can bring and some of the reasons that are valid as to, why people can have concerns about this. But I think that the beautiful part about it is that we are actively engaging in conversations from the public and private sector. This is something that retail investors are thinking about. This is something that institutions are thinking about. This is something that people who have quote unquote OGs in the space are thinking about. This is something that degens and traders are thinking about. This is something that ultimately touches pretty much anyone that is in the cryptocurrency community, and it's going to be one of those kind of, I would say, killer kind of apps to really, I think, ultimately kind of help onboard the next, hundreds of millions of people into actually being able to use cryptocurrency and being more familiar and comfortable with it as well.
Yeah, and one of the other things, somebody in the chat, Marimer, said, the government is usually a snail, but is moving like a tiger to pass regulatory plans. I really like that because it just goes to show how important stablecoins are right now, that we have regulation, we have people moving as quickly as possible because this is coming. And we kind of started this whole conversation with a quote from John Collison from Stripe saying that stablecoins are finally happening. And we see that in all of the things you just talked about. And I think that it is happening. And we've got a lot of proof of that. But I think we should do kind of an overall reminder of where we started. I know we moved
Yeah.
through this quickly. Our goal is to give you guys as much information as possible that's accurate, unbiased, and we can just present it to you. You can then go on and do research based upon what we've said. But let's break down what we went through since it was so quick. So we talked about what stable coins are, and
Yep.
we likened them to digital gift cards backed by real dollars. We talked about the types that exist. We talked about how trust plays a huge role in the difference between these decentralized cryptocurrencies and then currencies like stablecoins that have a central issuer, but then being put on these decentralized networks. So it kind of there's a lot of factors to that. We talked about the Genius Act, what's going on, and the BRICS nations as well. But I think bottom line is stablecoins are here. They're already reshaping how money moves, who controls it, and I'm excited to see what is next. And Trevor, I know you wanted to make sure that we pointed out that we're going to add all of the sources that we pulled from this to the show notes somewhere so you can access it as well because we think that's
Yeah.
really important.
Yeah, it's super important to make sure that folks can continue to do your own research and to make sure that there's just so much information out there and it's easy to get lost. But we're trying to also provide you with the sources and some of the information that we use to put this episode together. And one of the other things, too, Jess, maybe we can chat on this and kind of end on this note is what recently happened with banks, because banks are potentially going to be next in line and looking to issue their own stable coins. And some recent news that recently happened. Want to share that with the group?
Yeah, sure. So, like a few minutes before we started, I'm trying to find where I was sent this, but there was something sent about I can't find it, but it's Custodia Bank. I know that's Caitlin Long's bank, and another bank are coming together and have just released that they're creating a stable coin. I think it's Avit or Avit, AVIT. And so that's coming out. And at first I was reading about it, it's like it's going to be on a permissionless blockchain, and then like down the way it said something about Ethereum. So I guess it's being built or being not being built on, but it's going to be used on Ethereum. I don't know if it'll go on other networks as well. But that literally happened, like I think they released it within the last couple hours. So we definitely do see banks starting to create stable coins as well, which I'm interested to see how that kind of rolls out, because we know that Trump said in an executive order that he's banning CBDCs. And Elizabeth
Yeah.
Warren has been complaining about how, I shouldn't say complaining, but has been talking about how anyone can issue stable coins. But if we get into the space where we're then saying only banks can, how is that different than what we're doing now? I mean, it kind of begs that question, I think.
And some of the crypto purists at heart, right? They've argued that stable coins, although they're great, they are still pegged to fiat currencies. And the original purpose of Bitcoin was to really kind of get away from that system. So what we presented today is a lot of different varying views and opinions of this, but ultimately, stable coins are really, really important. I think that this is going to be something that's really fluid. It's continuously changing as we speak. And probably by the time folks that weren't able to view this live today come and check this out, when we get this uploaded on the socials, maybe there's going to probably be some other news that's going and happening, because that's just the nature of the space that we move in. But really wanted to thank everyone for joining today and being a part of this conversation, and look forward to coming back in a couple of weeks and bringing you some more amazing current information and what's going on in our space and how it can affect you. And also to look out for the sources so that you all can continue to do your own research if you would like to do so.
Absolutely. Thank you guys all for joining. I also really appreciated the comments in the LinkedIn chat. I feel like I'm, looking at multiple things, but it is very interesting to make it more as a conversation. We're having a conversation, Trevor. We've pulled in all of this other information from other conversations. And I think it's important that other people participate in it as well. So we really appreciate that. We'll be back in probably a couple weeks for another Blockchain Simplified on a new current event topic that we're scrambling to get all the information together. And who knows what'll happen the hour before that. But thank you,
You
Trevor.
know,
I really
and our
enjoyed this.
saying is, don't worry, don't get your brain fried. Come check us out at Blockchain Simplified. So we'll do all the crazy research and put all this stuff together in a very compact, short amount of time so that you all can spend that time doing more useful things. But really, thank you all for joining us and look forward to another conversation again. Bye, y'all.
Thank you. Bye.